Welcome to Markets Now. I'm Michelle Rook along with Brian Grady with Pro Farmer. An update in the grains, a little more mixed over in the livestock futures. And Brian, let's talk about kind of what propelled the grains today. Corn and soybeans, was it all technically inspired?
Probably not all technically inspired. I think light holiday trade, you get these types of moves where it's almost like a vacuum where you push the market a little bit, and because of the lighter volume, it doesn't take as much to get going, and you pick off some buy stops and those types of things. South American weather situation, I think the market continues to pay close attention to that. It's actually improved a little bit just recently in South America with Argentina and southern Brazil receiving some rains. But with that said, Argentina has problems and their crop estimates continue to decline. Southern Brazil has some issues as well, but it's pretty much isolated with most of that country in favorable conditions.
So there are forecasted rains, though, Friday through Sunday. If those don't verify, could the market push back over $15, or is it going to take more to get soybeans above that level?
Oh, I think they would make a run at it if those weekend rains are disappointing. That's the type of news that markets react to this time of year. So with South America being the major focus, I think that it definitely could be the case. And if we do push above $15, there's potential for some explosive fireworks because it would be like lighter holiday trade in all likelihood.
So corn following the soybean market today for the most part?
Yeah, and I think corn will continue to follow the soybean market, both to the upside. If we push above $15 in soybeans, corn would follow to the upside. But if the soybean market rolls over, then I think soybeans are probably the downside leader, and corn would follow there as well.
Yeah, and corn at times has been a follower of wheat, which has usually been to the downside. So is the wheat market done going down yet, do you think?
Oh, I think that we probably put in a low a couple weeks ago in the wheat market. It's just going to be a slow grind higher. There isn't any real supportive news out there. We got grain flowing through the Black Sea, both from Ukraine and Russia right now. We're into the dormancy period for the winter wheat crop here in the United States. The Argentine crop is hurt, but we already know about that. Export demand is poor, and that's a wet blanket over the market. And so there just isn't anything to get traders excited about at the moment.
Yeah, but we do, like you said, we have very little weather premium put in the wheat market, and really, this isn't the time of the year where we normally do that, though, is it?
No, I think that the most likely scenario for wheat where we would see some potential buyer interest is we flip the calendar to 2023. We start off the new year. The funds come in and say, okay, we want to be long something besides what we are in the ag markets right now, and wheat looks like the best value of the complex, and maybe we could find some fun buying in there because the funds are short SRW wheat futures, and they're also short the spring wheat futures. They still maintain a little bit of a long in HRW.
Yeah, we'll see if we can get some catalyst to get them covering those shorts. What about the live cattle market? Set back here today. Was that profit taking, squaring ahead of the on-feed report coming up on Friday, or what?
Yeah, the cattle on feed report, waiting on cash cattle trade to develop. We're into the holiday time frame. Packers have really slowed down their slaughters, and that'll be the case again this week and next week and maybe the week after. And so until we get back to normal slaughter schedules, and the Packers have to get a little bit more aggressive with the cash bids, I think that they're just trying to slow things down. They'll probably try to improve their margins, and not a lot of trade in the futures, to be honest with you, unless there's a surprise on the cash side.
Yeah, we talk about some of this funky end of the year or light volume trade. Is that what happened with feeders today? Why we were higher when corn was also higher? Or?
Yeah, the interesting thing is the last couple of days here, feeder cattle have been trading with the corn market instead of opposite the corn market. So completely flip-flop from what the normal would be.
So what about the hog market? Feb got hit pretty hard today. Is that because it's getting too premium to the index, or just because the cash market can't bottom, or what?
Yeah, still waiting on a seasonal cash low there. We've had some hints that maybe that's happening. The days where we've seen price strength though in the cash index have been minimal, and both in terms of numbers and in terms of magnitude. And until we see some pretty solid proof that the cash index has posted a seasonal low, I think that you'll continue to just see limited willingness to put premium into the front end of the market.
Appreciate it. Brian Grady with Pro Farmer. That's Markets Now.